You are watching Market Watch, the brief overview of the key events from the world of finance. Goldman Sachs has lowered its 12-month forecast for the STOXX 600 index to 520 points for the second time this month, citing euro strength, U.S. instability, and declining corporate profits in Europe. A projected 7% drop in earnings per share in 2025 is linked to the fact that 60% of the index's revenues come from outside the Eurozone, making them vulnerable to currency fluctuations. Falling energy prices are also weighing on the energy sector. At the same time, the tech and industrial sectors may partially offset the losses. Meanwhile, Citigroup downgraded its rating on U.S. equities to neutral, reflecting global economic concerns. The U.S. dollar continues to weaken, hitting a 3-year low against the euro and a 6-month low against the yen. This decline is driven by uncertainty in U.S. trade policy, including a temporary suspension of tariffs on electronics from China. The Federal Reserve is considering interest rate cuts despite persistent inflation, which is also putting pressure on the dollar. As a result, investors are turning to other currencies, such as the British pound and Australian dollar, which are gaining strength amid the dollar's weakness. Bank of Japan official Akio Okuno stated that despite current financial market volatility, there is no significant decline in short-term global liquidity. Unlike during the global financial crisis, the current environment is marked by relative stability. Nonetheless, the Bank of Japan remains vigilant, particularly with upcoming trade talks with the U.S., where currency policy may become a focal point. Japan is also facing steep U.S. tariffs, including a 25% duty on automobiles, which puts pressure on the country's export sector. Now to the crypto market. Analysts believe Bitcoin could surpass $135,000 by Q3 2025 if the U.S. Treasury continues injecting liquidity into the economy via the TGA account. Since February, $500 billion has been added, bringing total liquidity to $6.3 trillion. Historically, Bitcoin has shown a strong correlation with global liquidity, and the current conditions could support further growth. Temporary tariff suspensions and falling treasury yields also play a role, boosting Bitcoin's appeal as a hedge in uncertain times. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.